Hi, everybody. This is Robert Chadwick with America Mortgages. Thank you for joining another one of our bi-weekly webinars. This one is actually very exciting. We have Mike Jew, who is the Vice President of Demand for Doorvest. Doorvest is a San Francisco-based company that has a very unique way of being able to invest in U.S. real estate and grow your portfolio. So I will turn this over to Mike. Mike, thanks for joining us. I'll start your slides soon. How this webinar will go is you'll present your slides and what the program does, and then we'll talk about the mortgage options. And then at the very end, if everybody could hold their questions, and then we'll have a live question and answer session. The webinar should last anywhere from 30 to 45 minutes. And I think, or I actually know, that everybody will find this very interesting and very informative. So with that said, Mike, thank you for joining us. And I will start your slides and go ahead.
Perfect. Thank you, Robert. Hey, everybody. I'm Mike, as Robert mentioned. Great intro. Thank you. I'm the VP of Demand here at Doorvest. And what I do is I help folks like you easily become real estate investors in U.S. real estate through complete ownership of single family rentals. I'm based here in San Francisco, but we work with folks all around the world. And the thing that we do here at Doorvest is we make it super, super easy for anyone, anywhere in the world to buy and own an investment property entirely outright, just entirely online. Great for investors like yourself who don't plan to, don't want to, don't expect to ever go and physically visit a home that they invest in, but still want to have confidence in their investment and be sure that a expert management team is making sure that everything is going smoothly. Look at the next slide, please, Robert. So some of the magic around single family rentals and complete ownership, I think perhaps some of the crew here, if you've made your way to this webinar, be familiar, but you get to take complete ownership of a real asset that's in the US. You get a bit of that inflation hedge. You get to benefit from historical rent growth and property appreciation, which is standard for real estate, but for US market as well. And with the help of Robert, an easy way to take leverage on your investment, sort of to magnify your returns. And depending on your situation, not a tax expert, but plenty of tax advantages around working with real estate. What's special at Doorvest here is we make this even better. We offer quite a few solutions that other property sellers are just not able to do. Things like guaranteeing rental income, making guarantees upon some of the renovations we make and repairs and maintenance on the homes, and helping you and yours take a look at some of the long-term financials. And the reason why we're able to do this is we have a wonderful expert team in-house that's with you the entire journey, from property purchase through long-term ownership and property management, where some other property sellers will sell you a property and then that ends your relationship until you're ready to buy again. We've really set the business up so we take a long view where we're with you for the entirety of your journey, if possible, with a Doorvest home. Make it the next slide, please, Robert. So just where do we get started helping out with our expert teams? Just sort of starting from the top. Teams spend quite a bit of time underwriting geographies or identifying the best places for investors like you to purchase a single family home. So generally we analyze all the markets across the United States, and we're really looking for those markets where we can find rapid population and job growth, and as important, strong real estate inventory that comes at the right price point for an investor. You can imagine there are tens of thousands of markets across the US. Zeroing in on the ones that give you the highest percentage for success is quite a job. Average purchase price of homes on the platform ranges from about $200,000 to about $350,000, depending on where you're investing and the type of home you're looking for. And most importantly, can generate a really attractive ROI. Of course, a lot of this is dependent upon whether you take a loan and some of the specific details of the loan, but we'll get to some of that in Robert's section, which I'm excited for as well. Make it the next slide, please. So of course, if identifying a geography was the entire job, this would be a little bit easier, but really that's just where it begins and just where how Doorvest helps begins. We take care of everything else as well in the entire process. So just trying to minimize the time, the effort you'll have to take to build a portfolio and to have confidence in that portfolio. So once we've identified the geographies, Our team underwrites thousands of homes. We generally acquire about the top 1% of these homes that we find. What we're looking for is for homes that will have characteristics that will be great for potential investors. Once we've identified the home, we'll go through the whole process, which is we'll go ahead and we'll purchase the home. We'll identify what kinds of renovations, how much it'll cost to stabilize the home and make it an attractive rental. Do those renovations, make sure the work is done up to snuff and on budget. Then that's where you as an investor come in. We'll help you identify the perfect property, help walk you through a lot of the purchase and closing process. You'll take title, you'll fully own the home, and then we continue working with you. We'll property manage the property long-term. Starts with finding a great tenant to put in place to rent the property. And ongoing, we'll take care of all the maintenance and management requests from this tenant. So your involvement, we'd like to keep as minimal as possible. You can just focus on building your portfolio and watching that build and grow over time. Make it the next. Oh, sorry, Robert. So normally if you do this on your own, you have to do all this on your own, right? Identify a geo, pile through all these numbers to see on the screen, identify the right neighborhood, the right home, buy the property, manage the property. It's pretty intense. I mean, this is many, many hundreds of hours leading up to the property purchase, and then many tens of hours a month to actually manage it. So we'll just take that off your plate, let you focus on being an investor. Thanks. Sorry for the head fake there, Robert. So our platform makes it really easy for you to look and identify investment homes that might be attractive to you. So just very basically, we like to give you some of the basic information up front. If you look in the top left, just easily look at some of the basic stats, like how big is the home, what is the layout, how many bedrooms and bathrooms, what kind of neighborhood it's in, as well as some top line financial numbers and what returns could look like for you. Of course, I know many of you like to do your own research, so we like to be as transparent as possible. On the right, for every home, you can see sort of a complete financial P&L rundown. Try to identify as many of the possible areas of risk and benefit as we can in here. Let you get a better view, not just of how the property looks when you buy it, which of course is important, but how it performs over first 5, 10, 20, 30 years of owning the property, however long your investment horizon is. A little cheat code for you all, an easy way to go through this, especially if you want to look at different scenarios or input your own specific parameters, is to book a call with someone on our client partners team. They can help. Just dig into what your investment goals are, give you the short list of what homes might be a great fit, and help you run through various financial scenarios and see what your investment could do and how it could perform over the short and long run. Make it the next slide, please, Robert. So at Doorvest, our goal is to make it very easy for you to buy and manage a single family rental investment home entirely online. We have an expert team. We run our process from end to end, from initial property identification through to purchase, through to whenever you decide that you're ready to sell or leave the property. We work really, really hard to make sure you're able to buy with confidence, especially, and this is a core tenet of the company, for those folks who never intend to physically visit or take a look at the property, who don't want to spend a lot of time and effort in building out the portfolio. They just want to make a decision and execute on their investment. The next slide, please, Robert. So thank you all very much. If you're interested in learning more, 2 easy ways to get started. The first one is you can just head to www.doorvest.com. There you can sign up for a free account. You can start looking at properties in our inventory, see what we have on offer, and get a bit of a feel for it. But also, you can email the email address on the bottom there, clientpartners@doorvest.com. We can work to set up an initial consultation with you and get one of our client partners on the horn to help understand what you're looking for and help do some of the lifting even before you decide that you want to get started with a property. I'll pass it off to Robert now, but first, thank you all. And Robert, I'm excited to hear a little bit about some of the offerings from American Mortgages here.
Yeah, thanks, Mike. Very interesting. I think one of the issues that a lot of our clients talk about, and which you address specifically in your presentation and what your company does, is the expert property management. Besides helping to identify a property and us placing the mortgage, or if somebody wants to pay cash, that's an option as well. But really the key piece, and to make sure that it's successful, is having a successful and a competent company like yourself to do the property management. I don't know if you want to expand on that anymore, but I think it's something really important to point out.
No, that's a great question and a great call out. Yeah, so a benefit of us going end to end, of course, is what Robert said. We're very invested in the property management, work with you long term. We have a national property management team that just deals with these homes. Actually, the secret sauce that makes it even easier for us to property manage is part of the end-to-end process. So since we're identifying and renovating the home and placing the tenant and working with you and continue to manage it long term, the types of renovations and fixes we do up front are made so our property management team's lives are easier in the long run. So really invest very carefully to make sure that we're solving problems in future years at the point of renovation. Second benefit to this is not unlike if you're like me and you bring your car to be serviced at the same service station at all the correct intervals for a long period of time, we're able to keep a long receipt of all the work that's ever been done on the home, all the way back to initial renovation. And so you can get a very clear picture as to what the present and future risks and status of the home look like. So the short answer is we cheat and we try to make the job as easy for ourselves in the beginning as we can. And then of course, an expert property management team as well that stays on top of the tenants and make sure that all those phone calls come to us. We can deal with them when they're happy, and you don't have to play landlord and pick up the horn and understand how to unclog a toilet or how to change a light bulb in Columbus, Ohio.
Very, very good. So thank you. We will go into the American Mortgages option. I'm sure a lot of people are already familiar with the loan programs that we have. However, I'll touch on some of them. We did add a few more slides that give some examples of how to qualify. And then at the very end, I can see we already have questions filling up, but we'll answer all the questions that people may have. So again, thank you for joining our webinar. We try to have these every few weeks, and we try to bring on vetted partners such as Doorvest that we know can bring value to our clients. So as a company, American Mortgages only deals with foreign nationals and expats. So just like, their expertise with Doorvest, with us, our expertise is making sure that if you're living outside of the US, that you have a smooth and easy transaction. So all of our loans, regardless of which loan program it is, does not require US credit. It's a big question we get all the time. It's something that is absolutely not needed. You can use a credit report from your home country, or if you're in certain countries that maybe do not have credit reporting agencies, we do have loan programs around that as well. For all of our loans, if you're familiar with some of the international banks that may offer similar loan programs, they require you to open up a bank account with that bank or deposit a minimum amount of funds. Normally it's between 50 to 150,000, depending on, of course, the loan amount. All of our lending is dry lending. There's no requirement to open up a bank account with that lender or have a certain minimum deposit. Foreign income, of course, because this is all we're doing, is allowed. We have loan programs in all 50 states, so we can address if you find properties that you would like through Doorvest, we can address in any state or any city. If you're a foreign national, we can get up to 75%. If you're a US expat, we can normally get up to 80%. Once you complete your documents, and our documents are quite simple, I think you'll probably find it easier to apply for a US mortgage than it is in your home country. But normally we can give you a loan approval in 72 hours. So once you submit your paperwork, we issue you a loan approval. You actually get a letter that states that your loan is approved. And if you were working with Doorvest, you would submit that along with your offer. And Doorvest is ensured that you're going to be able to have a loan when you're closing your transaction. The US, if you're comparing it to many other countries, has a very fast closing time. It's anywhere from 30 to 45 days, and we're normally almost always able to meet that closing time. You can sign your closing documents in a variety of ways, but there is no need to travel to the US. As Mike was just stating, you can actually purchase and find a property, specifically with property management and so forth, with Doorvest online, and the mortgage is the same. You do not need to fly to the US to sign your mortgage documents. We have at least 4 or 5 different ways where you can close the transaction, where you're at. So our loan programs are for purchases, refinances, and also a release of equity or cash out. This is, again, very unique to the US, but regardless of your age, whether you're 19 or 99, you can still qualify for a 30-year tenure, 30-year amortization mortgage. We even have loan programs that are actually 40 years, where the first 10 years is a fixed interest-only portion without any adjustment in rate that converts into a 30-year fix, again, without any adjustment in rate, but now servicing the principal and interest, which allows you to really optimize your yield. If you want to choose to buy a property and qualify for a mortgage using only the rental income of the property, meaning we're not going to ask for your personal income, we're going to common sense underwrite it based on the rental income that would be projected for that property. That is absolutely possible, and it's our most popular program, and I'll explain that a little bit of more detail. And because we have such robust loan programs, we have a 97% approval rate. We're very proud of this, meaning that almost any submission that you have that we put together will get approved. And of course, because we have offices in 12 different countries, speaking a variety of language, you have 24/7 service, meaning that if you don't have to stay up in the middle of the night, 3 o'clock in the morning, trying to explain why Hong Kong has no zip code. This is 100% of our clients are foreign nationals or US expats. This is our expertise, and really, honestly, nobody does this better. So I'll quickly go over our loan programs, and then this will probably take 5 or so minutes, and then we can have the question and answer. So our first and our most popular loan program is the American Mortgages Express Plus. What this is there is no personal income required to apply for this loan. This loan is treated just as if you were to buy a commercial property, where it goes common sense underwriting off of the cash flow of the property, meaning that if the rent can cover the mortgage, taxes, and insurance, then the loan qualifies. And I have a little sample after this, but we have a minimum loan amount of $150,000 and a maximum of $3 million for this loan program. Now, with the properties that Doorvest features, which is the $200,000 to $350,000 range, this actually works out perfect. So as an example, if the gross rental income, and we get this when we do the valuation or the appraisal, we have the appraiser do a rental analysis. And it's the same thing that they would do for the value of the property, but this is based on the average rental in that area for this particular property. They'll come up with a number. And in this example, the gross rental income is $2,400. The total mortgage payment is, with principal, interest, tax, and insurance, is $2,400, meaning that the loan qualifies. So basically, we use 100% of the mortgage, of the rental amount, in order to qualify for the mortgage. Absolutely fantastic program, super easy to qualify for, and it's one of our most popular. The second loan program, because we're doing loans for clients all over the world, if we had to analyze everybody's tax returns or pay statements or whatever it would be daunting. It would almost be impossible for our underwriting. So what we do is, instead of supplying your end of year statement and your tax returns, what we do is, if you're employed, we want a letter from your employer. If you're self-employed, that letter is from your accountant. And what it does, it states 2 years of income and current year to date. That's it. That's as simple as it is. And it actually qualifies as if you had supplied 2 years of tax returns like you would and for a normal loan in your home country. Again, loan amounts as low as $150,000, LTVs for a foreign national up to 75%, a US expat up to 80%. No US credit required. This is an example of this. Now, the income that qualifies needs to be, it's based on your gross income, so pre-tax income, and your total mortgage expense, and this would also include the expense for your property where you're living in the country, has to be below 47%. That's the debt to income ratio, which qualifies for this loan program. But as an example, if your gross income is $10,000 a month and all of your expenses for this rental property, including the property that you live in, is $4,700 a month, the loan qualifies. The next one is our U.S. expat program. With this program, you do have to turn in or show your 2 years of U.S. tax returns. But what we want to do with this program is make it as easy as if you were living and working in the U.S. and walking into your local bank. Same exact rates. You do not need a W-2. Foreign earned income is absolutely allowed, and foreign earned tax returns is absolutely acceptable. So this allows you to qualify just as you would if you were living and working in the U.S. The only caveat to this is you still need to maintain U.S. credit, and we would like to see at least a 680 credit score. This is, again, the explanation of this, and it's very similar to using the income letter. And that is, again, we want to see a debt to income ratio below or at 47%. So our most popular program right behind the no income loan program is our high net worth mortgages. Now, we have a lot of clients that maybe will buy an entire portfolio, or they'll buy, extremely expensive properties. We have loan programs where we realize that high net worth people have very complicated tax returns, perhaps a lot of jurisdictions, et cetera. So rather than asking for their personal income documents, what we do is we go off of their asset statements. Now, this is liquid assets, so stocks, bonds, cash in the bank, et cetera. We'll take a 2-month average of that, and we'll use that based on the fixed portion of the mortgage. And I'll explain it in the next slide. But the best part about this loan program, even though you're qualifying purely on your asset statement, there is no encumbrance on this asset statement, meaning the day after your loan closes, you can trade it, you can sell it, you can cash it out, you can choose whatever you would like to do it. It is merely used for qualifying. So as you can see, for the high net worth loan program, we take a 2-month average, and in this case, it's a $5 million portfolio. We divided it over the fixed period of the loan. In this case, it's a 5-year fixed, amortized over 30, and we come out with an average income of $83,000 a month, meaning that as long as your mortgage payment is that or below, the loan is going to qualify. So as you can see, you do not need a tremendously large portfolio in order to qualify for these programs. It's a very simple, easy, clean way to qualify, especially if you're looking to buy multiple properties. So a program that we just launched, and I think this is something that would be really interesting for Doorvest, is we used to have loan programs where if your child was accepted to a university in the US, you would have to qualify based on your personal income and the current debt that you had in your home country. And again, it would have to be under 47%. We just launched this program. It's absolutely fantastic, where it allows you to qualify just as you would on the AM Express loan, meaning that you don't have to provide personal income. We will treat this, even though your child is living there, but we will treat it as an investment property, meaning that if the rental income qualifies, then the loan qualifies. So there's no longer this pressure of trying to reduce debt or whatever to be able to buy your child a suitable, safe property to where they're going to university. Now we can qualify based purely on the rental income. Absolutely fantastic program. and works very similar as the other program as you saw before. So that is it for our presentation. Thank you very much. We have the scannable code that has all of the contact for both ourselves and for Doorvest for this particular presentation. You can scan this, you can get all the information, and you will also, everybody attending this and all the other people that signed up but maybe weren't able to attend due to time differences or so, you will get a recording of this video that you're able to download, share, whatever you choose to get more information from this. So with that, I will start the question and answer session. Let me pull this up. Okay, so Mike, what I'll do is I will read the questions and we'll just decide where what fits you. The first question is, how did you select the markets that you are currently located in? And obviously that's for you, Mike.
Oh, perfect. Thank you for the question. So we're looking for markets that have some really strong base characteristics. We look for population growth as well as job growth in the area. But we layer on a next layer, which is looking for affordability of properties. Impacts in two ways: just how much money you have to deploy to buy a property, but the base price at which you purchase a property affects all those ratios that Robert had shown down below. So you can imagine there might be some attractive markets with very expensive property prices, quite challenging sometimes to make an investment property work, both from a pro forma perspective and also from a loan perspective. If you group the properties we have into just 4 broad states: Texas, Ohio, Georgia, and Oklahoma, each of them has some special properties that we really love. I'll just very briefly, in the interest of time, touch them, but we can talk more offline about it. But Texas, always very robust population and job growth, very famously landlord-friendly. Atlanta, Georgia is very similar as well. Some phenomenal companies there like Coca-Cola, Delta, and UPS based for a strong job base. For Ohio, actually, there's a recent US trend of folks flocking to the Midwest. So it's seeing some very robust population growth there. And also some of the US chip reshoring initiatives are causing companies like Intel to stand up new headquarters in that area. And for Oklahoma City as well, strong university system nearby, strong job market, and lower purchase prices than average in both Ohio and Oklahoma.
It's very interesting because especially working with a company like Doorvest, places like Oklahoma, I'm American myself, and it would be something that I would never think of, or venturing out to, but it's only because I'm not familiar with the market and I don't have the expertise like Doorvest to be able to recognize what is a good opportunity to invest in.
I think it's funny, even as an American working in real estate, a city like Columbus, Ohio, if I was doing this as an individual, would never make my radar. And it ends up, as we're coming into 2023, it's one of the hotter real estate markets coming through the year, and we've been in it for a little while. So nice to have an expert team that all they do is think about which cities should we buy properties in and which cities should we go to next.
Yeah, fantastic partner. Okay, next question is your property management team in-house?
Oh, this is an easy one. Yes, property management team is all in-house, and part of our commitment to stay with you long-term and make sure that we like to have our hands on the process from front to end to make sure you're having the best experience.
Okay, thank you. Next question is, thanks and interesting. Any plans to expand to multifamily homes or to also include short-term rental arrangements?
That's such a really great question. Currently, all single-family homes, all occasionally multifamily homes. Short-term rentals, not today, perhaps in the future. And the crux for that is we want to do the fewest varieties of things that we can, as best as we can. So for our company, in the current time, we found that single family and small multifamily are where we can property manage the best, pro forma the best, and identify properties the best. So we're focusing on that for the moment, but always open to expanding in the future.
Yeah, good question. And as you expand, just for the knowledge, we can do 1 to 4 units as we would as single family, basically the same terms and rates. And then we've done them in the hundreds of units in one building at the time. So really for us, the flexibility is there as you grow with it. Okay, next question. Are the property managers employed by Doorvest, or do you subcontract to local property management companies in the respective cities?
Yeah, these are all employed by Doorvest as well. In fact, although our company is remote and distributed across the US, I sit across the virtual hallway from the folks who lead and run our property management team. And go figure, we pretty much talk every day. One can imagine once you enter the ecosystem, we want to make sure we take care of you. And we spend a lot of time talking back and forth to make sure XYZ client is here. They have a question, a concern, something good has happened. Let's make sure we pass the right message along and make sure that they're happy with it. Yeah, great question. Thank you.
And again, I mean, it comes down to, and this is, we talk about this a lot in our company, is dealing with experts, right? I mean, with us, 100% of our clients are foreign nationals and expats. With you, 100% of your clients are getting your professional property management services. And this is, I mean, it's something that probably isn't taken as seriously as it should, but dealing with experts, I think you had said something about you take your car in for service. And, if you have a BMW, you're not going to take your car into a Toyota servicing station, right? You want to take it to that servicing station. And it's the same thing, the way I look at this, both the mortgages and the property management.
Yeah,
Okay.
no, absolutely.
Yeah. Next question is, can a UK limited company access mortgages and Doorvest offerings? So I'll answer the mortgage portion. And then, I mean, I don't think there's an issue, but you can kind of go into it on the Doorvest side. But for us, you can absolutely hold title in an LLC, but it has, or an entity, but it has to be a US LLC or a US entity. There has to be a borrower, there has to be a responsible party for these mortgages. But remember, the loan to values are limited to 75 or 80%. So, even though there is a recourse on these loans, the LTV is quite limited. So it really doesn't affect in the event that there would be any kind of enforcement normally. And Mike, maybe you can answer if there's any issues with Doorvest. If somebody was to pay cash, they would obviously be able to have some sort of different way of vesting, perhaps.
Yeah, on our side, quite straightforward. As long as the purchase can be financed, no problems from our side. So should definitely be nice to Robert and take advantage of some of the offerings you have. And we'd love to have you as a customer. Yeah.
Perfect. Does Doorvest provide mortgages?
That's why we have Robert here. We love partnering with wonderful mortgage companies to help you finance your purchases.
Fantastic. Thank you. Next question. As a non-US citizen, is the maximum loan to value and is the LTV dependent on income? Very, very good question. So as a non-US citizen, the maximum loan to value is 75%. Now, again, as I explained in the programs, there's a variety of ways to qualify. Now, we do realize that a lot of our clients are entrepreneurs, whether they're investing in real estate or they have their own businesses or whatever it may be, and maybe they do not show their true serviceable income. We have that handled. You actually do not need to provide personal income documents. We will treat this as a purely commercial transaction, meaning that we will go off of the rental income only, which will allow you to hopefully maximize the loan to value. If for some reason the rental income doesn't get to be sufficient enough to cover the entire mortgage, it does not mean that the loan doesn't qualify. It just means that you may have to put a little bit more money down. Okay, next question. Regarding the AM Student Plus, can you rent the property for your children? And who's the owner of the property? This would be mine. Yes. So you can rent the property. I mean, that's what the loan program is stated for. So you can choose to rent the property technically to your child, or you can choose to rent the property to somebody else. That is entirely your prerogative once you obtain the mortgage. The owner of the property can be yourself in your personal name, or you can set up a company or an entity in the US, and that can actually be the owner of the property as well. Next question is in Spanish, and my Spanish is limited to, I don't know if you can understand that, or Yeah, sorry, apologies, but we do have a Spanish speaker on our team, and I will make sure that they address this and answer it for you. This is a question for me. Do you offer construction loans? So we do have loan programs that will allow you to purchase a property and make renovations on the property. This is probably something that Doorvest actually might be interested in, because they may find undervalued properties that do require a little bit of renovations in order to bring them up. The only caveat to this is it's absolutely available for foreign nationals and expats, but there is an experience requirement portion to this. So if you do have experience in this, it's absolutely possible. And the LTVs can actually be quite high when you look at the fact that the renovation cost is built into the loan. If you have more questions about this, you can email me and I'll put you in touch with our team that handles this type of loan products. Next question is AM Express. How much is the minimum loan to value equity required for a foreigner? There is no minimum loan to value as long as you meet the minimum loan amount. So we have a minimum loan amount of $150,000. It is possible to maybe go a little bit below that, but it becomes a very expensive loan when you do that. So we tend to tell our clients that 150,000 seems to be the make sense number in order to qualify. But your loan to value could be as little as you choose, as long as you meet the minimum loan amount. Another question: do you need 20% deposit for the AM Express program? The minimum down payment for a foreign national is 25%. For a US expat, it's 20%. Next question. Can you give us an idea of how much property management costs, i.e. leasing fees and monthly management fees? Very, very good question. So, Mike?
Yep, great question and relatively straightforward. Our property management fees are 10% of gross rental income. Also have some nice options working with investors and sophisticated investors for things like prepayment for discount and so on, that our team can work with you to figure out the best package, but 10% of gross rental income.
And I think that's fairly average across the board, if I'm not mistaken. I mean, we have rental properties, and I think I'm actually paying 12% now that I think about it.
Yeah, we're bottom of average range. I see 10 to 15 on average. You could see as high as 20 to 22 for some very specific services, and as low as 5. You make some trade-offs if you go down to 5, of course. We think that's the right amount and for the right amount of service to make sure you're happy.
And I mean, although you certainly, we never want to give tax advice, and you want to check with your CPA or your accountant, but if I'm not mistaken, a lot of these costs can actually be tax deductible off of the gross rental income. So that's something to look into. And if you do have tax questions, just like our partner with Doorvest, we have many partners that deal specifically with expats or foreigners based all over the world, and we can happy to point you in that right direction. Next question is: sorry, I joined late. Might it be possible to get the slides, or is there a recording available? Absolutely. Everybody that is joining this webinar, and all of the people that happen to sign up and maybe didn't attend, will receive a recording, and it also will be sent out in our weekly newsletter. So certainly it'll probably take maybe about a week to get all of the fine-tuning and the editing in, but you will receive the slides along with the presentation. Next question is: I have a piece of land in Illinois with permission to build 4 homes, 1,800 square feet each. Property is in walking distance to Metro and has fantastic rental potential, or sell it outright. Would you give a loan to build a home against guarantees? It really, really depends on the sponsor and the type of property you're building and so forth, but we're happy to explore it. Again, the similar team that deals with the renovation loans would actually be this. If you email us after this webinar, I'm happy to direct you to that specific team. Next question is: with Doorvest, are there homes in new developments, or are they existing homes? This person has very good questions.
That's a great question. It's a bit of a blend. The vast majority are existing homes. The reason is we'll look for homes that are distressed in very good neighborhoods, and that gives us some range to invest in renovations and to also sell you the home at a price point that makes sense for an investor. That being said, about 5% of our inventory at any given time are new builds. The reason the inventory is lower there is we're quite picky about which new builds we would bring onto our platform. We want to make sure we're negotiating very hard for the right price so that when you purchase it, you can have the kinds of returns you're looking for.
Okay, looks like we have a couple more questions. What is the average range of interest rates for the various lending products? It really depends on how you qualify. Certainly, I mean, everybody enjoyed and appreciated the low rates that we had post-COVID. I think now people are coming to accept the fact that interest rates are somewhat stabilizing, and they are where they are. Even though interest rates are higher, they're still historically low for the US. So our average rate probably for a foreign national is 8%. But keep in mind, in the US, you have very long amortization periods. You have 30-year amortization regardless of age. There are also interest-only programs that allow you to optimize the yield, that are fixed, that you can, as the rental yields increase, you can really clearly project where that is. But the most important thing is your rate now doesn't mean it's your rate forever. And Mike can probably attest to this very clearly. When interest rates were super low, there were people bidding up properties 10, 20, 30% in some markets. Now you have the advantage of being in a buyer's market. So although your interest rates may be slightly higher, you do have the opportunity to refinance at a later date when rates go down, but you also don't have to worry about paying an inflated price for the property. And Mike, I don't know if you want to add to that. I think it's very important for people to understand that. And before we always say you date the rate and you marry the property. So your property is, as you mentioned, a long-term investment if that's what you choose, but the rate is enabling you to get the leverage you need when you need it, and you can never time the market. So Mike, sorry, go ahead.
No, that's a really good point. And if any of you all are able to perfectly time the market, you should definitely let all of us know. We have plenty of work to do together, but I think that's exactly it. What we're seeing in the market, in the US market, in the ultra low interest rate times, you would see the headlines for sure of some markets where homes were going up 10, 20, 30, 40% in very short order. And buyers were making a lot of concessions to get front of line. And this is where you hear stories about cash buyers waiving every single contingency you could imagine to acquire a home were coming into play. Not great for a buyer, not great for an investor. Fantastic if you're a seller in that environment. Interestingly, many of those markets that got super inflated when you see the property values coming down, those are the same ones where essentially they went up with the froth and they're coming down with the froth. We've been very fortunate where we're focusing where we can get a good deal for investors, and that meant avoiding many of these frothy markets because we just couldn't find a property that would be great for an investor from a financial standpoint. And so we've seen our markets chug along sort of at the same consistent long-term rate with minor blips around some of the more extreme movements in interest rates over the end of last year. They didn't froth up super hard when interest rates were ultra low, and they're not really coming back down. Nice, stable, easy markets. Marry the property, date the rate is a great way to think about it. We have strategies alongside partners like Robert as rates change to sort of further optimize your investment as time goes on. I'm not looking to make a return in one day here. You have many years to adjust and optimize your investment.
Absolutely agree, and great answer. And I think the one thing to point out too is the US still has a massive shortage of available properties. A variety of reasons. A lot of it had to do with not being able to do construction during the COVID period of time. So if I'm not mistaken, you might have a better number, Mike, but I believe it's 7.5 million property shortage is what they're projecting now, meaning that if people are concerned, and certainly in some markets where, maybe prices went way up, but in general, I think we're really seeing prices stabilize and not really adjust down, but just really kind of slowly adjust back up.
Yeah, no, that's actually, I'm loving this part because I'm not an economist, but I do read a lot of things that economists write. And the more nuanced view we're seeing, especially in the markets that we're in, is that there's limited seller inventory, but buyer appetite is coming back very, very strong through, already through the first half of 2023, as rates stabilize and people are able to just have some more certainty around what the rate would look like as they're making their buying decisions. And what that means is that there's been upwards pricing pressure in many of these markets that we're in, driven by low supply. So interestingly, a really good time to put your flag in the sand if you were to enter the US real estate market. You'll benefit as more and more institutional investors sort of begin to come off the sidelines and apply even more buying pressure across a market where there's relatively limited selling inventory.
Yeah, absolutely agree. So, okay, Mike. So I don't know if you have any parting words, but thank you for your time. Please, take your time to kind of wrap things up, and then we will end this webinar.
Yeah, no, thank you for having us on here. Great to meet you all, Robert. Excited to continue on with our partnership. For the audience here, you can imagine just with the kinds of customers we deal with, we speak to many kinds of buyers who interact with many kinds of lenders, with many kinds of products. Oftentimes lending can seem very thorny, but with Robert and his team, as you can see on the webinar here, really wonderful assortment of products and really simple and easy to get started on, which I think sometimes can be the scariest part for a foreign national or an expat once they've gotten some conviction to enter the market. So on the Doorvest side, we'd love to work with you. And we're super excited if you work with Robert and come to us, because we know that portion will be straightforward, easy, and quick. We could focus on your investment instead of focusing on paperwork and digging up tax returns and paperwork and trying to understand how the math would work. So excited to work with you all. And Robert, thank you for having us on.
Yeah, fantastic. Thank you, Mike. And thank you, everybody, for joining. We will have our next webinar in, I think, 3 weeks. And we'll be announcing that soon. Please follow our channel, subscribe to not only America Mortgages, but to also Doorvest. Again, thank you, Mike, and thank you, everybody, and have a good night or a good day wherever you're at.